What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday, and that means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week and the technicals from the major FAANG stocks. We start things always with Facebook. Start of the week at $220 per share. This is probably your time to get out, because it ended the week at $205 per share. This was yesterday when Meta dropped out of the top 10 companies by value, when it dropped 4% yesterday, and it dropped another about 1% today. This stock is certainly trading on technicals rather than fundamentals, because I think at a $560 billion valuation, you can start to make a lot of arguments based on cash flows, based on earnings, based on cash just sitting in the bank over at Facebook. But nobody cares. The stock just keeps going down. So we'll analyze it from a technical perspective and look at some zones where maybe this thing will finally catch a bid. We'll see what happens with Meta. Now, Google is to limit Android tracking, and on the day, most of the social media stocks and ad plays started to fade. But what we have to realize with Google, okay, they're doing this similar to how Apple is doing it with their phones. Obviously, Google sees it as maybe a competitive advantage that Apple has over them in terms of this privacy. Well, Google's going to start to roll it out too. They probably don't want to get sued by a bunch of other, regulatory agencies as well. So they're going to roll these out. But just remember that Google's not going to kill its own business. So it's going to roll this out probably definitely a little bit more gently than those Apple iOS privacy changes happened just about a year ago. So we'll see how this materializes, but this is another risk for Facebook. That's why I threw it in here, because Google's going to have a little workaround in this that makes their Google ads work on the independent sites that run them, but also on their search engine, right? They don't want to interrupt that business. But how this could impact Facebook is maybe Facebook isn't awarded that same luxury. Maybe Google is trying to figure out a way to just stiff their number one competitor in online ads. Imagine if Google could eliminate Facebook, how much more business would come to them, okay? And so I'm not necessarily saying this is what's going through their mind, but as a Facebook investor, you probably should be thinking about these types of things, because there's headwinds heading into the future. Obviously, the stock has sold off a lot, probably priced in quite a bit of bad news already. Moving on to Apple, started the week at 168, ended flat at 167 or so. Now, some Apple workers are looking to unionize. We've seen this with Starbucks. I think they successfully unionized, and we're seeing it a little bit with Amazon. I don't think we've had a successful one yet, but this is not across the entire company. It's certain stores, and we'll see how this materializes. Obviously, with inflation where it's at, workers that work on an hourly basis are really feeling that pinch, because they're more than likely driving to and from work, so they're paying it in gas, and also they're seeing it in their food costs. They likely rent as well, and so they could have seen those costs rise. And so obviously getting more money, getting more benefits from your employer certainly can combat inflation. We'll see how that materializes. Moving on to Amazon, started the week at 3,055, end of the week basically on that number exactly. Amazon and Visa resolved their spat. This was over credit card fees. You probably remember our story, maybe it was a month or so ago, that Amazon was playing hardball. They thought about maybe changing their co-branded credit card to a MasterCard product. This was all a part of the negotiations, because in this case, Visa does have a little bit of leverage, but so does Amazon. And so the two finally came together and worked out a deal. Now, Amazon has $1 trillion of untapped value. This is according to Third Point's Dan Loeb. He said that the company's AWS unit has an enterprise value of 1.5 trillion, and that is about the current market cap of Amazon at the current time. He also says that was just AWS. He says AWS is worth 1.5 trillion. Right now, the entire company at Amazon is worth $1.5 trillion. He says that Amazon's retail business is worth about $1 trillion all on its own. So the company really should be worth about $2.5 trillion. Now, why is Dan Loeb saying this? Well, he's got $784 million worth of the stock, and I don't know exactly how long he's had it for, but maybe he's trying to get out of it. I don't know. You got to look at these things kind of cynically, but look, he does make a decent argument. I don't know if he means right now AWS is worth 1.5 trillion. Over the next 5 to 6 years, that's where it'll be. It wouldn't surprise me. That is one of the reasons why I am so bullish on Amazon, because I do see this $1.5 trillion market cap, and they have two business models that, in my opinion, could easily be $1 trillion plus business models. We'll see if that valuation ever comes to fruition for Amazon. Moving on to Nvidia, started the week at $342, ended the week at $236 per share. Nvidia had earnings this week, and if you missed our video, I'll include a link to that in the description below. They had revenues in the most recent quarter of $7.6 billion. That was 52% year-over-year growth on that revenue side. I won't get into the whole financials here. We already did a video on that. I'm sure most of you saw it. But look, you've got a $612 billion market cap on this one, and you're running in that $28-30 billion worth of revenue. Obviously, some people are going to say that this company is still overvalued at the current time. We are seeing it pull back. We'll talk about that from a technical perspective. Now, Nvidia is poised to benefit as vehicles go electric and autonomous. We obviously know this with Nvidia. One of their business models, they're known mainly for data center and gaming chips and certainly like crypto mining, but obviously they have a big part in automobile chips as well. Certainly a growth driver for them as more people make that switch to a new electric vehicle. Nvidia declares a 4-cent dividend. I don't know if many of you buy the stock or understand that they pay a dividend, but now you know. You got 4 cents per share. Moving on to Google, started the week at $2,692. This one's continuing to slide down to about $2,605, and this was the story that I brought you at the top related to Facebook, is they're going to limit Android app tracking, but they are very vague in when this is actually going to roll out. Again, they are going to figure out a workaround for their core business so it doesn't impact that, and it wouldn't surprise me if they try to throw a couple of more wrinkles Facebook ways in order to gain a competitive advantage against them. Just some rumors there. Moving on to Microsoft, started the week at $293, pulled back to $287. I did buy this one today, and I'll show you why from a technical perspective. Not an endorsement, not saying this one can't go lower. In fact, it wouldn't surprise me if it does, but I did take a small risk today and bought the dip on Microsoft. We'll talk about more of that here in a second. Activision Blizzard's facing hotter pressure in the workplace probes. Imagine if Microsoft had waited even another month, maybe even 2 months to make this tender offer. I bet they could have gotten this company even cheaper, as they are facing these probes that are certainly a bad look on the company. Certainly probably wouldn't have been beneficial for the stock, given where the stock market has gone over the last month since this deal was announced. Yeah, they probably could have got this one at a better price, so we'll see what happens there. Moving on to Tesla, started the week at $857 per share, end of the week right there at $857. It popped up. It's defending that $850 to $900 level. Now, the Ford Mustang Mach-E tops Tesla's Model 3 at Consumer Reports. Not necessarily surprised by this. I just threw this in here. I just think it's kind of fun. I saw a lot of people, flipping out about this on Twitter. Well, look, guys, Ford advertises in this magazine, and Tesla doesn't advertise really anywhere, I don't think. And so Ford is obviously going to get a leg up on a magazine where they basically pay its bills. So I would never expect anything less. Elon Musk looks to end the SEC monitoring of his shareholder communication. So he's saying he's actually making this like a First Amendment kind of free speech argument, and I think he's taken this all the way to court, or at least he's filed motions on this type of thing. So we'll see if the SEC starts to loosen things up when it comes to Elon Musk, since he's involved in a lot of different things. I think maybe 5, 6, 7 years ago, it might have applied. Certainly where social media was and where news was breaking certainly was a little bit different, but times have changed, and we'll see if the SEC starts to loosen things up. But many would argue that they already have in relation to Elon Musk and probably other executives. Moving on to the technical segment of the show, Facebook. We told you that 220 was an area where you probably wanted to get out of this one, and if you did, you saved yourself a couple of bucks. And now look, now we're at lookout below territory. So that's when I break out the red box from a technical perspective, that's never a good sign. It's showing you that I don't know where this one is headed. You broke a very critical technical level at 240. You sliced through that. You sliced through 220 like it was nothing. Wouldn't surprise me if this thing slices through 200 next week like it was nothing, and then you're in a box between about 160 and 200, where again, I am not looking to buy this stock, okay? I just got out of it. I would look, honestly, as this one retraces and potentially goes back up, you've got levels of resistance now, again, at about $220 per share. That was support. Now it's resistance. Even higher than that, all the way up at 240. You bet you believe when you look at this volume, a bunch of people, and I could tell on the comments of this video, a bunch of people stepped in here at 240. Okay, I told you, wait for candles over 240, and this is probably the perfect example, and this is risk management. Okay, I know there's no YouTubers out there that are getting a lot of views by making videos on risk management, but risk management is what we actually preach here on the Investor Channel. When this thing broke below 240, and we're kind of revisionist history right now, but you can learn something from this, okay? Not just from Facebook, but from all your stocks, okay? When a stock breaks through a technical level, the reason why you wait for another candle to go up, okay? You don't nag it at the bottom low price, because what happened with this one, okay? Another 20% got shaved off the stock price. That's why you wait for candles over areas of support, because from a technical perspective, this thing had completely broken down. And in the shorter term, this thing is in a mega, I mean, we are talking a mega downtrend. There looks like there could be hope, but it is much farther down here, south of $200 per share. I would not be looking to get back into this one until it starts making some kind of bottoming formation, higher sets of lows, just like it's done multiple times when this stock has gone down in the past. Moving on to Apple, just hanging out, and it's keeping up the rest of these stocks, quite frankly, and part of the S&P, the fact that the S&P hasn't broken completely down into correction or recession territory, is Apple is holding up nicely. We see this red trend line. This thing is still locked in this uptrend, even if this stock retraces next week down into the 160s. Not really that big of a deal from a technical perspective. It's just kind of pulling down into the area. Now it has made a pit stop at an area that we do like from a maybe a longer term perspective. There's an area here at 167, but you're making a series of higher lows. I wouldn't see any reason why you'd want to step in on that one, but it is still technically in an uptrend. Amazon is just holding this level. We could almost like put a box where it's at right now. It is consolidating pretty tightly in this area between about 3,050 up to about 3,250. It's putting up a ton of candles over the last, I would say, last couple of weeks right inside this area. You'd like to see this area hold, and you'd like to see this stock break higher, but intermediate term, this stock is actually still in a downtrend, okay? It's making a series of higher lows all along here. Shorter term, much shorter term, it's kind of in an uptrend, so this one should resolve itself one way or another. You get a break to the upside, you're looking back into this 3,500 range. Very bull case, you're looking way above 37. On the downside, you're looking for these areas down here at 2,750 to hold with Amazon. Moving on to Nvidia, I told you that I thought this stock was going lower. When people heard that I sold this stock, they wondered what I was thinking. I was thinking it was gonna go lower, and I was gonna have a chance to get it down here again at 228. That is about where the stock is right now. It's at 236. Okay, it touched this area intraday. I thought about stepping back in on this one, but I decided not to, because from a shorter technical perspective, we had a shorter term uptrend. That was that green line that was in there, but we broke through that, and we're actually confirming we have lower cluster sets of highs. Wouldn't surprise me though if this one rebounds again next week. If you have a green week or you have a green couple of days, this one will push back up in here to the 250 range. But as long as it doesn't get above 260, that would basically signal that these sets of highs are being taken out, and we could be kind of a sign of a reversal. Otherwise, I'd expect us to get rejected and keep retesting this 225, 230 range. That's where I might step in with a light position with Nvidia again. Moving on to Google, the reason why I might be in on Nvidia, because I'd probably rather buy Google, honestly, from a valuation perspective, earnings, everything I love about Google. We are in a shorter term downtrend on this one. Longer term, the uptrend is basically broken. That's this long green line here. But more specifically, we're consolidating with Google really between about 2,500 up to about this 3,000. You can think about selling up at this $3,000 level. We're at 2,608, very close. If we put up some red candles on this one next week, I probably will step in on this one. I think we'll see what happens. Moving on to Microsoft, this one, much like Nvidia, had rebounded nicely. It came down here and touched kind of the 280 range, rebounded all the way back into the 310s. People thought that was, the rally was back on. No, it got rejected, came all the way back down here to about 287. I stepped in with a very small position on this one. I probably won about 10 more shares of Microsoft, and so I'm buying them in 1 or 2 increment lots. I can't remember if I bought 1 share or 2 shares. This is an IRA account where you're only allowed 6,000 in deposits every year, so it'd be 10 shares of Microsoft is over a third. It's basically a half of your deposits for 1 year of your entire life, and so you got to be careful when you get into this one. That's why I stepped kind of lightly in this one. From a shorter term, it could be, I think that we're going sideways with this one, okay, just based on the valuation that this company has. Also the Google chart as well kind of looks like it wants to go sideways. I think Apple kind of starting to look like it wants to go sideways as well. Amazon's been going sideways basically forever. We'll expect at some point Facebook will start going sideways. Nvidia could start going sideways as well. And so it makes me think that that's where Microsoft is doing, and it's kind of towards the bottom end of the range. And I stepped in here and bought this one. If you're already overweight Microsoft, you already have a full allocation of it, this isn't an area where I would step in, because if you break below this 280 level, it brings in a ton of great levels down here. Okay, this is where I'd be far more aggressive if you own this stock already. Longer term though, it has, depending on where you want to draw this uptrend in, it's not as confirmed as Apple. Apple is absolutely confirmed still in this longer term uptrend. Microsoft, you'd really have to paint this to basically tell you what it wants to tell you. I actually think this uptrend is broken, but I think we're going to go into sideways consolidation mode with Microsoft. Just too strong of a company to really see that big downdraft. But look, the market can do anything, and we'll certainly be here to buy it if the market really starts throwing out companies like Microsoft. Moving on to Tesla, it's been in kind of this, we can put a box on this one, and it is really tight. It is basically between about 832 up to about 940. We're putting a ton of price action in here. The bulls are really defending this area, but there's plenty of bears as well. Okay, well, shorter term, you are still making lower sets of highs along here. I am not convinced that Tesla doesn't break down from here and retest kind of the $600 to $700 area. That would be an absolutely phenomenal place if we can get it. Now, the other scenario is we're just going to go sideways like the other stocks that I talked about. So we'll have little relief rallies. I don't think we'll get back to the 1200 range. There's just a lot of macro stuff that I think is going to keep stocks like this under a little bit of pressure, but it could be that these little relief rallies could be your area to sell if you want a little bit of liquidity. But as they pull back, it can just give us a little bit more confirmation that, yeah, there's some bull action here, but the bears are still there, and we can pick this stock up here. Eventually the bears and the sellers will dry up, and stocks like these will resume uptrends at some point because the fundamentals are too strong. But last thing I want to point out about Tesla is this one, like Apple, is actually still in an uptrend. That is why this area is being defended so well, because from a technical perspective, it is hitting 2 areas. It is hitting the previous highs. It is also hitting this uptrend. So from a technical perspective, you can absolutely step in here if you feel like it. Just understand your risk. I would absolutely set a stop loss somewhere around here, because if you break these levels and you break it decisively, this under $700, it's absolutely in play. And I think your max upside, quite frankly, is back up to 12. So you've got almost equal risk reward on this one. Not necessarily the best setup. It gets much better as this stock continues to pull back. That's why we're focused on a couple of other FAANG names before we dive into Tesla. Hopefully, guys, enjoy today's video. Enjoy your weekend. We'll be back again very soon. Good luck with your investments.